FHA, the Federal Housing Administration, has released new mortgage letters that officially announced changes to FHA mortgages. While FHA mortgages are designed in a way so that low to middle income households can attain home ownership, the changes are being made in order to improve the stability of the agency. The first change is for annual mortgage insurance premiums. The annual mortgage insurance premium for FHA conforming mortgages will be increased 0.10% to 1.3% for FHA jumbo mortgages that are above $625,500. The annual MIP is increasing from 0.05% to 1.35%. This new rule does not affect the FHA streamline, with reduced fees for loans that were endorsed prior to June 1st, 2009. The new MIP premiums are effective for case numbers assigned on or after April 1st, 2013. Borrowers will be required to pay the annual mortgage insurance premiums for the life of the loan. This change affects all borrowers who have a down payment of less than 10% of the purchase price at closing. In the past, when FHA loans dropped to a loan-to-value of 78%, the annual MIP was canceled. The new rule is effective for case numbers assigned on or after June 3rd, 2013. Credit scores, FICO, that are below 620, as well as debt-to-income ratios that are greater than 43%, will require that the loan go through manual underwriting. For loans that fall into these categories, the lender will be required to show compensating factors and the reason why the loan should be approved for closing. This is effective for case numbers assigned on or after April 1st, 2013. The FHA Streamline Refinance is also exempt from these new rules. As credit scores are becoming an important part of the FHA financing, borrowers need to know as much information even before considering a home purchase. In a recent report by the FTC, between 10 and 21% of consumers have errors on their credit reports, which is actually between 20 million and 42 million people. Prior to submitting a mortgage application, consumers should obtain their credit reports from the three major agencies and examine them for errors. It's important to pursue that corrections be made with each agency. Having done this in advance can possibly increase the credit scores as well as save time during the mortgage process. In order to deal with these latest changes to the FHA loan program, there are several things to consider when purchasing a home. Home buyers who are using an FHA mortgage for financing should look for state or county housing initiatives, which usually come in the form of bonds or loans. These will help reduce the initial cost of the mortgage transaction. The use of approved gifts and seller concessions will also reduce the upfront cost of the new mortgage and the amount of funds home buyers will need. On the other hand, after June 3rd, 2013, existing homeowners should now plan to refinance their FHA loans through a conventional loan when the loan-to-value reaches below 80%. By making on-time monthly mortgage payments and decreasing overall debt, these homeowners will be in a better financial position to refinance to a cheaper conventional mortgage, which will eliminate the mortgage insurance premium.